Hello, this is Joseph Broderick, and we're going to cover a case study in this video on the truth about what's my car worth. And in this video, we're going to cover, does the insurance company pay fair market value? Or do they do like most people say and they lowball? And we're also going to find out, why the insurance company doesn't want to pay more. And we're going to finish off with an example of some real situations where people were complaining about the settlement offers they were getting. And we're also going to take a look at some book values and see exactly if, is the blue book value something you want to be using to settle your total loss insurance claim. Now, the insurance company states that they pay fair market value for your car. Okay, so with your insurance company, maybe you're thinking, my insurance company's being fair with me. I'm dealing with a really nice gal and a really nice guy there at the insurance adjuster there. And I think they have my best interest at heart. Well, the insurance company is not interested in paying you top dollar for your car. And the reason is that insurance companies lose money when they pay a claim, which makes sense because they make their profits when they collect your premiums. And so when they pay a claim, they're losing money. And the lower they can make your claim payout, the more money in their pocket, and consequently less money in yours. So let's take a look at some examples. The first one I found here is interesting. There's a guy who put together a class action suit against State Farm, saying that they're not paying owners enough for their wrecked vehicles. And in here, he states here that the suit alleges the insurer uses a third-party valuation service to systematically cut payments by 7%. Now, take that with a grain of salt. I've been in the appraisal field long enough, and you just can't systematically reduce anything by 7%. In his analysis, obviously, he come up with that number, but it's just not reasonable. It's completely arbitrary. And this is easily illustrated by the fact that, pick any car, go to autotrader.com, and, select your year, make, model, all that stuff. You're going to find a variety of prices people want for virtually the same car. So rate alone, there's a large spread between values, and 7% just doesn't make any sense. But it does illustrate that this gentleman here definitely feels that he was getting way undervalued for what he felt his car was worth. And the next one is a very similar situation here on this pirate4x4.com site. It says here, my insurance adjuster emailed a report from CC Cone, and the numbers are way off. They are using lower model vehicles as a comparison. And that is a common thing I hear from people, is that they feel that the insurance company is using inferior vehicles to lower their value and hence lower their claim payout. And this one here, this person here had a Acura GSR, which is one of the higher models for an Acura, and the insurance company's first offer was $2,400, and they later increased this to $32,000. Now this gentleman here, through his research for his 94 GSR, found that they're going in the $4,000 to $5,000 range. So this here would illustrate a loss if he settled at the $3,200, a loss of as much as $1,800. And to me, that's a significant amount. And the next one here, this person here is dealing with Progressive, and they say they had a stated value on their 911 for $18,000, and the insurance company was only willing to offer $15,000 to settle the claim. Now there's a $2,000 loss when a person who actually had a stated value that their car was worth $18,000. And in this one here from State Farm, this person here bought their car, which was a 1998 Lexus LS400, for $13,000 the prior year to having it a total loss. And the insurance company was only offering $7,800 to pay out the claim. And when this person did their research, they found that the models of her car were selling in the $12,000 to $14,000 range, which is right in line with what she paid for it. So there was shown that the retail value is in that range, yet the insurance company is offering way, way less. And this here would represent, a loss in value of $4,200 to $6,200, depending on what you come up with the final value and were able to prove. And the next one, this person was dealing with farmers, and you notice their site here, they're not very happy, Farmers Insurance Group, Socks.com. And with this person's 1994 Acura, he was noting that these cars were selling online between $7,000 and $14,000, and that's quite a wide spread. And so the insurance company was offering $4,400 for the first offer, and their final offer was $5,100. Now, with that wide spread from $7,000 to $14,000 for the retail value, let's just pick a middle of the road number and go with $10,500. And we're looking at a $5,400 loss if you settled at the $5,100. And in this one here, the person was claiming that they were using lower modeled vehicles to come up with their valuation. Okay, so there's an example that, getting a low ball offer from the insurance company is a common event. And unfortunately, a lot of people just don't know any better and think that the insurance company has their best interests, when in fact the insurance company only has their own interests at heart. So now I want to move on to the book values, and I've selected the book values from Edmunds.com, Kelley Blue Book, and the National Auto Dealers Association. And you're going to be surprised at what you see here. So I used a 2009 Cadillac CTS with 66,000 miles, and Edmunds.com shows the private party sale at $13,000, just a hair over. Now for the same car, Kelley Blue Book, they're saying it's worth $13,593. And at the National Auto Dealers Association website, that same car, they're saying it's worth $15,725. When you have a range from as low as $13,000 to $15,700, when you have that range, how can you support that as evidence? You've got 3 different websites, all using the same type of process of aggregating a whole pile of cars to come up with a value, and they're all showing a different number. So where's the credibility in that? And in a minute, I'm going to show you why that's not even going to work in your favor in a moment here. And the last thing I want to look at is heading over to autotrader.com for that same car. If you look down at the bottom, it's saying the lowest price asking for this car is $16,200, and the highest price is $18,500, with an average asking price of $17,200. So now we have a range from a low of $13,000 to a high of $17,200. Now, using those values, where do you think the insurance company is going to come in? I would think they would come in at probably less than the $13,000. They'd probably come in with a figure somewhere, say in the $10,000 to $12,000 range, expecting me to come back with, the Kelley Blue Book value, because that's what most people do. And then they'll bump it up to maybe $13,000. I'll say, oh, well, I'm only losing $500. Good enough. Let's settle the deal. When in fact, I'm losing a ton of money. When you show that the average asking price is $17,200 and as high as $18,500, yeah, that's a lot of change. Now, I'm going to show you next an actual what the insurance companies will use. Now, this here is an actual appraisal form for AutoSource market-driven valuation that an insurance company used to appraise a 1991 Ford Mustang. They come up with a value of $5,770, and they outline the valuation process. And then they continue on with evaluation details on the vehicle condition, and then they come in with comparable vehicles. And if you notice, this comparable vehicle came from an auto website in kijiji.ca. So what they do is they select vehicles from the market to come up with a value conclusion for your vehicle. Now, be it a lot of these vehicles that they choose are low-valued vehicles or at the lower end of the range, but they're in the business of saving on claim costs. So I wouldn't expect anything less from any insurance company but to find the least valuable comparables possible to prove a low claim payout for your vehicle. Now, the only way you're going to be able to counter this is to have your own actual cash value appraisal, similar to the one I showed you. Now, that may seem like a daunting task, and it may be something that you feel is way over your head, but in reality, it's not. Now, I have an offer for you. I'm not going to give you some big sales pitch here. It's either you're going to take it or you're going to leave it.